welcome to all the bankers in this early morning session. So we are here for discussing the importance MCQs of your module C, and whatever the questions we are going to discuss, that is the most important from the exam point of view, because you are going to learn the concept from these kind of the questions. Okay, so the one request that if you're finding anything is important, just quickly write down that. Okay, so let's start. Before to start, I just want to say, if you're new on the Officers Adda 247, just hit the subscribe button so that you can get regular update from our side, and download the Adda 247 application so that you can get everything at a one place. Okay, so let's start today's class. I think everyone just joined us now, right? So let's start today's class. Okay, before to start, the one update also from our side, our target batch that is actually running, and our selection batch is also just going to be start. Okay, so you can just enroll in our batches and buy the code that is Y422, because with this code you are going to get the big discount, and this is the time when you should just enroll in our batches, because you are going to get the quality content as well as you are going to get the classes that all based on the fully exam oriented. Okay, and the mock test, ebooks, recorded classes, live classes, that all you are going to get through this kind of the batches. So let's start today's session with the very first question, and you have to just tell what would be the answer of this question. Okay, just quickly tell me what would be the answer of this. Whenever we're talking about the maximum amount beyond which a company is not allowed to raise funds by issue of the shares is known as what? Okay, then if I say that the chapter of the company account, you are going to understand the share capital, like the issuance of the share, and the most important, the types of the share capital you're going to understand in this chapter. And that chapter is a very important chapter of your module C, right? Now, when we talk about the maximum amount beyond which a company is not allowed, so that capital is actually known as your authorized capital. Okay, so we can also understand the authorized capital as a registered capital as well as a nominal capital, right? So the correct answer of this question, that is a nominal capital. So for this you have to understand the maximum amount beyond which, suppose that we are talking about the maximum amount, suppose that a company registered with a 10 lakh rupees value. Okay, so you can understand the company, if a company is going to issue the shares of it, so you can understand the company, like the face value of a one share, that is 10 rupees. So that means the maximum shares company can issue, that is a 1 lakh rupees only, sorry, 1 lakh shares only. Okay, so you have to understand, whenever we are talking about the maximum capital, so you are actually talking about the maximum, like the how much capital can be raised through the public, so that is known as a authorized capital. Okay, so we are just talking about, like, the if the one share, if the face value of the one share, that is a 10 rupees, so that means a company maximum can issue the 1 lakh shares into the general public, right? So, or you can understand the face value, that is a 10 rupees, because the if companies registered capital, that is a 10 lakh rupees, it is mentioned. Okay, so that means in this way we actually going to elaborate this, right? So now I'm hoping that everyone just understood this, right? Okay, so authorized capital, that is also known as a nominal capital as well as the registered capital of the company, and beyond which any company is not allowed to issue the or raise the funds. Okay, so I'm hoping that everyone just understood this. Next question. Next question is about, you have to calculate the proprietary ratio. A very important question. That question is actually taken from the ratio analysis chapter, and that is also very important chapter, as you know that this is from the module C. And if I talk about, for JAIIB examination, A, B, and C, like three modules are very important for clearing the examination as well as with very good score, because if you just having the good command over these modules, so you can definitely get a good marks, like the 80 plus 90 plus marks in this examination. Okay, because module D is all about just based on your what you daily do in your banking. Okay, so that you can just do by reading itself, but in module A, B, and C, that actually is important, that actually just creates the foundation of your accounting subject. Okay, so that means these modules, or you should have a very good command over these modules. Okay, so if like you have to calculate the proprietary ratio, so we know that how to calculate the proprietary ratio. Whenever we're talking about the proprietary ratio, it is nothing but a shareholders fund. It is nothing but a shareholders funds to its total asset, or you can also understand as a net asset. Okay, so we are just talking about here total asset, or you can also just write here the net asset. So proprietary ratio, you can understand proprietary ratio, that actually explains the relationship between the shareholders funds to total asset. Okay, up now what we have to do here, the shareholders funds is given here, so the we only have to put the values here. So we know that the shareholders fund value that is given the 15 lakhs, so just write here, and now it would be divided by the total asset. Okay, so you can understand whenever we're talking about the total asset, so you can understand debtors always would be our asset as well as a current asset. Okay, as well as a quick asset also. Debtors, you can understand, suppose that any person who just bought the goods on the credit from you, that means he just become the debtor for you and you become the creditor for them. Okay, and you can just demand money from your debtors, that means it is considered as an asset for your company, right? So debtors, you can understand, like the debtors actually work as an asset for your company. The debtors also work as a current asset as well as a quick asset for the company. Okay, now cash asset, current asset as well as a quick asset. Okay, so that is also very important, that like the cash is a asset as well as a quick asset, current asset as well as a quick asset. Fixed asset, that actually work as a non-current asset for your company, because whenever you purchase any kind of the fixed type of the asset, like any kind of the machine, you never just purchase for the machine for selling within a 1 year, or like you just want to convert into cash within 1 year. Okay, so that's why fixed asset is considered as a non-current asset, but we are talking about the total asset, right? We are not talking about the any current asset or non-current asset, that I actually explained. Like you should knowledge about that, right? So now we talking about that debtors, cash and fixed asset, both are the all debtors, cash and fixed asset, all are the asset for you. So if I have to just add here, 5 lakh is given, 10 lakh is given, and the 5 lakh is given, so that would be equal to your 20 lakh, right? So that would become the 20 lakhs. So this ratio will become the 3 by 4, or you can also just write here that is 0.75 is to 1. The correct answer, very correct, good answer here, that the correct answer, that would be the 0.75 is to 1. You know what this ratio represent? If I talk about the proprietary ratio, the formula is the shareholders funds and it is divided by the total asset. You can understand, it is just, you can understand, like if it is a 0.75 is to 1, you can also just write the 75%. Okay, that means the total asset that is financed, the total asset of the company that is financed by, yeah, 75% of the asset that is financed by the shareholders funds in the company. Okay, so this proprietary ratio actually explains that, right? So suppose that the ratio is what we derive, that is 0.75. So we can also just write as a in the percentage, that is 75%. So you can understand for any company. Now whenever you are just watching like any companies, like financial statements, so you are just going to understand what the means of the proprietary ratio. It actually just means that like the total asset, like the 75%, if the ratio, proprietary ratio, that is 75%, that means it is financed by the 75% of the asset that is financed by the shareholders funds. Okay, so this is a very important thing. I just want, I think everyone just understood this, right? Now next question. So this is very obvious, but sometimes we actually confuse, what is the relationship between the asset, liabilities and the capital, right? So what is the relationship between the owner's equity, assets and liabilities? We just do not have to be confused. And if we talk about the very important thing, the balance sheet equation, the balance sheet equation is also known as your accounting equation. So never confuse between this, like you most of our colleagues just confuse between that. The balance sheet equation is another thing and an accounting equation is another thing. It is nothing different. You have to understand, whenever we're talking about the balance sheet equation, you have to understand the balance sheet equation is all about the asset is equal to liabilities plus equity, or you can also just understand as a capital. You can also say that the shareholders fund. Okay, so now you have to find out what will be the options here, correct? So the correct answer, that would be the last part, right? So that asset is equal to owner's equity plus liability. Okay, so that would be the correct answer of this question. Okay, right? So this is how we actually just write like what the correct equation it is. Okay, I think it is pretty much understandable for everyone. So asset that is equal to the owner's equity plus liability, right? Now, on the forfeiture of the shares, share capital will be debited by. Okay. So the very important thing what we understand by the forfeiture of the shares. When we talk about the share capital, you have to understand the share capital. What we understand by the share capital. Share capital, when we talk about the share capital, suppose that the share capital, like company just want what we are just going to understand. Suppose that face value of the one share of the company, that is 10 rupees. Okay, and we are just talking about the share capital. Like you can understand, whenever we talking about like company just want to receive the 10 rupees per share from every shareholders, right? Now you can understand from every shareholders or from every public, because there is a one step also included, your application step, like application process. Like we can also understand the application share capital or application money, right? So in the suppose that any company just want this 10 rupees in the installment, like some amount on the application stays, some amount as like on the allotment stays, some amount as on the first call, some amount as on the second call. Suppose that, okay. So now suppose that this company want that this 10 rupees, like the per the like one share, the face value of the one share, that is 10 rupees. Now company just want this 10 rupees in the installment. These all are just understandable as an installment, and through this you just have to understand like the multiple journal entries, that how to make the debit and credit entries, and that is a basic challenge to understand in the like in this chapter. So that's why this chapter is a very important to understand, right? Now, when we talk about, suppose that on in the application process, suppose that company just want the 3 rupees, in the allotment stage company just want the 2 rupees, in the first call company want 3 rupees, and in the second call company want again 2 rupees. Okay, so now you can just calculate here, this just become the 10 rupees overall, just company want the 10 rupees per share, the from the public. Okay, now suppose it what we understand by the forfeiture of the share. Now you can understand after allotment stage, because when we talk about the after like at the allotment stage, you can understand these all considered as a called up capital by the company, like company just want this money from the general public. Now after allotment stage, you can understand like first call, second call, that means after allotment stage, like the company just get its shareholders. Now you can understand for every due amount, like the 3 rupees that is due on the shareholders, so that means company actually demanded for that. Okay, like whenever the company just called the first call amount or second call amount, suppose that any shareholder just failed to pay this call. Okay, just fail to this amount, so that you can understand the director of the company actually forfeitures of that shareholders shares. Okay, so that you can understand the process of the forfeiture of the share. Now the question is on the forfeiture of the share capital will be debited by which like value, like the paid up value, called up value, uncalled capital, or any of these. So the correct answer, that would be the called up value. So we have to just understand, because the share capital you can understand. Now you can understand if the share capital that is a 10 rupees, right? For example, we are talking about for like the per share we are talking about. So suppose that this is a share capital, and these all just understandable as a called up capital, right? So you can understand, suppose that on the first call, like any shareholder just failed to pay that amount. So on the forfeiture of the share, you can understand the share capital will be debited by the called up value. Like suppose that this 3 rupees is not provided by the shareholder, so you can understand this would be debited by the in the share capital. Okay, so this is understandable as the on the forfeiture of the shares, right? Now the next question. premium received on the issue of the shares is shown on what side? Okay, so that is also very important question. Look, whenever we're talking about the premium received on the issue of the shares, you have to understand a very important thing. Look, what we are talking about, suppose that this is a company. Okay, so we are talking about this is a company, and we are, whenever we are talking about the company, suppose that this company named as a ABC Limited. Now company what do, company actually selling its shares, but just but just taking the money from the public, right? So for issuance of the shares, just company receiving the money. So you can understand it is considered it, because you just have to understand, like when we understanding the business entity concept, like the owner and the business both are the different entity, where the cash, what is the cash for this owner, that is capital for this company, right? So whatever the cash by the like this owner started the company, that is actually considered as a capital for that company. Now you can understand a very important thing, like the company is actually receiving the money. Whenever the company is receiving the money, you can understand that always understandable as a capital for the company, or you can also understand as a shareholders fund. You can also understand as a shareholders fund. You know what I say every time, that you should strong with your concept, because only question changes, not the concept. And if you're strong with your concept, suppose that you are unaware of this question, then by this concept you can just make the correct option here. So just tell me what would be the answer here, because capital you get where, whenever we're talking about the capital, where you are just going to get this on the liability side. Okay, so the correct answer of this, the liability side of the balance sheet, that would be the correct answer of this question. Okay, so because it is just premium received on the issue of the shares, that actually just recorded under the shareholders fund, so that's why it is just it would be just on the liability side of the balance sheet. That would be the correct answer for this question. Okay, I'm hoping that everyone just understanding this, right? So just hit the like button on this video, okay, and just share this video to your friends also, so that max a number of our bankers can join us with this session also, right? Now the next question. This is also very good question. Very good question this is. Okay. Okay, just tell me, whenever we are talking about, I'm just explaining a very important thing. Okay, just try to understand. Look, whenever we're talking about the revenue from operations, okay, so you know what, whenever we're talking about the revenue, you can understand that actually generate the income for the company, right? So revenue from the operations, you can also understand it is nothing but the sales of the company. Okay, so revenue from the operation, you can understand it is nothing but the sales of the company, that is given the 4 lakh rupees. Now just understand the cost of revenue from the operation, what it is, what it would be like. Whenever we're talking about the cost of revenue from the operation, it is nothing but the cost of sales, right? Because revenue from the operations, what we understand, it is considered as a sale. Now when we talk about the cost of revenue from the operation, you can understand it is the cost of the sales, right? So revenue, cost of revenue from the operations, 60% of the revenue from the operations. That means you can understand here the very important thing that is given, the sales, which is given the 4 lakh rupees. Another thing that is given, the cost of goods sold or cost of sales. Okay, so that actually given the 60% of the revenue from the operation, and we can understand this would be 2 lakh 40,000, right? Because we are talking about the 60% of the revenue from the operation, so you can understand the 60 would be multiplied into the 4 lakh. Okay, and it is divided by the 100, so it would become the 2 lakh 40,000, right? So this will become the cost of goods sold, right? Now operating expenses are given, that is 30,000, just right here, that is operating expenses, that is given the 30,000 here. And the rate of income tax, that is 40%. So what will be the amount of the profit after tax? Okay, what will be the amount of the profit after tax, we have to find out. Look, now you can understand the very important thing, whenever we are talking about the profit, what you considered here, you actually considered the revenue minus expenses on that. Okay, like I also explained in the concept of the matching concept, if you remember that, in the matching concept I already explained you that revenue and expenses both comes together. Okay, So revenue and expenses, you can understand, whenever we talking about the revenue, that is your 4 lakh, okay, minus expenses. Now you can understand it is cost of sales and it is the operating expenses. Okay, so now what it represent, it is actually representing the cost, or you can also understand it actually representing the expenses for that this revenue generated. Just try to understand what we understand in the matching concept. Look, by this I just also explaining everything, like so that you can just memorize that. Okay, so matching concept, what we understand, math like revenue and expenses both should be like both actually just what I told you, that revenue and expenses both comes together. Okay, right? So we are talking about the expenses, like for that the revenue generated. Okay, so you have to understand here the revenue minus expenses, that means this should all be considered as an expense, that actually reflecting the cost, right? So if I talking about the expenses, that it would be 2,70,000, right? So what it would be, it would be 2,70,000. That means this would be equal to like 240 plus 30, right? So this would be equal to your 1,30,000. Okay, so this would be your profit. This would be your profit. And the very important thing you have to understand, just let me uh, just a minute. Okay, now understand, this is actually just considered as a profit before tax, because we are not applied the tax here. Okay, so this would be considered as a profit before tax, and this would be equal to the 1,30,000. So now tell me, if I have to just calculate the profit after tax, so what it would be? Just now try to calculate this. Suppose that the rate of income tax is a 40% is given. So when we talk about, we have to just calculate the profit after tax, that means 40% is gone, the 60% would remain. So you can understand this would be 1,30,000 multiplied by the 60%, and that would become the 78,000. The correct answer of this question would be the 78,000 rupees. This is how we actually calculate. Okay, right? So I'm hoping that everyone just understood this concept. Okay, next question. Determine stock turnover ratio. You have to find out the stock turnover ratio, and the opening stock, closing stock, everything is given. So now you have to calculate how to calculate this. Whenever we're talking about the stock turnover ratio, the very important thing, the very first thing, that in the ratio analysis, the very first thing that you just do not need to form, you only have to formulate by your own. Okay, you just do not need to memorize any ratios. Whenever we're talking about the stock turnover ratio, it is also sometimes given in the examination as a inventory turnover ratio. Okay, so whenever we're talking about the inventory turnover ratio, you have to understand the inventory turnover ratio is nothing, because turnover is actually you generated, or you actually talking about from the sales, but here we have to consider the cost of sales. Okay, so whenever we talking about the cost of goods sold, it would be the just equal to the cost of goods sold, and it would be divided by the average inventory, right? It would be divided by the average inventory. No, the cost of goods sold we have to find out here for just getting this ratio. And the opening stock is given, closing stock is given. That means average inventory, we can just easily find out here. That would be 31,000 plus 29,000, and it is divided by the 2. Now you can understand, if I have to just find out the average inventory, what it would be, it would be 31,000 plus 29,000 divided by the 2, then it would become the 30,000, right? So this is for we actually calculated. Just a minute. Okay, so this is how we actually calculated the average inventory. Like the average inventory, what we understand, the opening inventory plus closing inventory, and it is divided by the 2, right? So by this we actually calculated your average inventory. Now gross profit is given 25% of the sales. Okay, so what we understand by the gross profit, gross profit is what? Gross profit is your formula of the gross profit, that is the net sales minus your cost of goods sold. Okay, now the gross profit, it is given the 25% on the sales, and sales is given 3,20,000 rupees. So now just tell me, if this is given, the sales is given the 3,20,000 rupees, and gross profit is a 25% on the sales, so that means the gross profit value, that would be 1 by 4 multiplied by the 3,20,000 rupees. 1 by 4, why? What? that is a 25%, right? So 1 by 4, we actually write from here, that is 25%. So 25, like the 1 by 4, and it would be multiplied by the 32,000, 3,20,000 rupees. So this would become the 80,000 rupees, right? So gross profit, that would become the 80,000 rupees here, and the net sales, that is given the 3,20,000 rupees, and the cost of goods sold we write here. So what would be the value of the cost of goods sold? Then it will become the 3,20,000 minus 80,000. So this will become the 2,40,000 rupees, right? So we actually just write here, that is 2,40,000, and it would be divided by the average inventory, that is 30,000, right? So what would be the answer of this? That is 8 times, right? So that would be the answer, 8 times here. And you can also just write is a add 8 is to 1. That actually depends on you, right? And that depends on the options also, that you just calculate by this. I'm hoping that everyone just enjoying this session. Everyone just enjoying this session or not, because a lot of questions you are going to just understand in this particular session, right? Okay. Now the next question: if selling price is fixed or 25% above the cost, if the gross profit ratio will be that you have to just calculate here, what would be the gross profit ratio here. So how to calculate this, like what would be the gross profit here, that we have to just calculate. So now just try to understand a very important thing, like the selling price is fixed 25% above the cost. What we understand? We actually understanding the, if the cost price is given the 100, that means the selling price is a 125, and where we are talking about the gross profit ratio, right? So gross profit ratio is nothing but the, when we talk about the gross profit ratio, is nothing but the gross profit, and it is divided by the net sales, okay? It is divided by the net sales and multiplied with the 100, right? So now if I have to calculate the gross profit, you can understand the gross profit is nothing but the, what we understand, the gross profit is nothing but the sales minus the cost of sales or cost of goods sold, right? So what we understand, this is our selling price, this is our sales, and this is our cost, okay? This is our sales and this is our cost, and that you can understand as a 25. So this would be your gross profit, that would be 25, and the sales is your 125. Just write here and just multiply with the 100, and you can just easily find out the gross profit ratio with your science formulas, okay? So you can understand accounting is nothing but the mathematics, and how you can just solve the two difficult question in a very simple way through your mathematics, okay? Right? So this is the way you can easily solve the questions in the examination also, right? I'm hoping that everyone just understanding this. Now the next question we are going to solve, okay? A firm has inventory turnover. This is a very lengthy question. This is a very important question as well. A firm has an inventory turnover of the 3, and the cost of goods sold is a 2,70,000. With better inventory management, the inventory turnover is increased to 5. This would result in what? Okay. Now just tell me one thing here. The firm has inventory turnover of the 3 is given. Now you can understand that it is nothing but the inventory turnover ratio is given. Like, right? Okay. So when we talk about the inventory turnover ratio, what it would be equal to? It is just equal to the cost of sales or cost of goods sold, and it would be divided by your average inventory. Okay. And now this value is given the 3, right? So this value is given the 3 as per the first statement. Now the cost of goods sold value is given the 2,70,000, and if we just write cost of goods sold value here, so we will find the average inventory here. What it would be? That it would be the 90,000, right? So it would be the 90,000 your average inventory. Now with a better this we actually taken from this, okay? Like the for the first statement that is given, with better inventory management, the inventory turnover is increased to 5. Now for the better inventory, you can understand again for the second condition we can just write in this way, and this would become the 5, right? And now the average inventory, that would become the 2,70,000. Just a minute. 2,70,000, and it would be divided by the 5. So the value will get 54,000, right? So the value that you will get 54,000. That means this would be your average inventory 54,000 rupees. Inventory turnover ratio is increased, so now you can understand your average inventory would be decreased, and by what amount it would be decreases, that is 90,000 minus 54,000, that would become the 36,000, right? So the correct answer, that would be the second part, decrease in inventory by the 36,000 rupees. That would be your correct answer for this question. Okay, I'm hoping that everyone is understanding. Like the you have to be keep simple everything. Okay, if you now I'm again just want to say your concept should be strong, because if concept is strong, then you can just do any question, because I'm also just doing the very first time this kind of, I'm just solving this kind of the questions like very first time, so you can just understand how easily I'm just explaining everything. Okay, so that's why I'm just saying that your concept should be very strong. Okay, next question. Total assets and the total liabilities and the current liabilities are given, and the total asset to debt ratio we have to calculate. Now why I'm saying again and again that in the ratio analysis chapter you just do not need to memorize any kind of the ratios. Okay, you are able to just formulate by your own. If I'm talking about it is the total asset to debt ratio, so how we can just write it, we can just write it as a total assets and it would be divided by the debt, right? Whenever we are talking about the debt, we usually consider the long term liabilities of the company, not the short term liabilities of the company, right? That I actually explained you. So if I have to just find out, we can just write the total asset and it will be divided by the long term liabilities of the company. Now when we talk about the total asset, that is given the 7 lakhs, just write here 7 lakh, and it will be divided by the long term liabilities of the company. What I just explained you, that whenever we're talking about the total liabilities, or in the question you are getting the total liabilities term, so you have to understand, just make this like this will be equal to the current liabilities and the non-current liabilities, because we are talking about the long term. That means I am just talking about the non-current liabilities. That means the total liabilities that is given the 3 lakh 60, and the current liabilities that is given the 10,000. So what would be the non-current liability here? That would become the 3 lakh 50,000 rupees. Okay, that would become the this, right? Okay, so now what would be the answer of this? That would be the 2:1. That would be your answer for this question. This is how we actually have to solve the questions in the examination. I'm hoping that everyone just understood this. Okay, so we just had the last question of this slide. Okay, so now we are just winding up this session. I'm hoping that everyone just enjoyed this session. Do not forget to hit the like button on the videos, and I just want to tell you here, just hit the like button as much as you can, and just subscribe the channel also. And the very important thing I just want to tell you here, that you can just enroll in our batches that actually running in the bilingual as well as the English medium batches. And I just want to explain you how you can enroll in our batches. So just 1 minute for that. And the very important thing, that just purchase the test packs, because it actually gives a final test to your preparation. So this is a very important, when you just preparing the for your examination, and you are just going to face the real exam scenario through this test packs. Okay, so now I'm just going to show you how you can enroll in our batches. Okay, just a minute for that. The very first thing, that you have to visit the adda247.com, where you have to just go to the JIB CIB section, in which you are just going to get the JIB CIB Maha pack as well as the JIB and the CIB section. You can just go to, you can just purchase anything like whatever you want to purchase in the store. So here you can get, here you can see that there is a multiple batches that is actually running, and the selection batch is a new batch that is going to start, okay, from the 20th of May. So you just enroll fast here, as well as a target batch, where you can also in our target batches, there are only few classes that only has been done. Okay, still there are very important classes that remain, so you can just enroll in our target batch also. Okay, how to enroll in this? You just have to go to the buy now section, and in the buy now section you have to apply the code, that is Y422. Remember one thing, just do not need to pay the full amount. Okay, you have to apply the code Y422, and you can see that there at a so minimal price you are going to get everything from this. Okay, So this is how we can just understand how you should just how you should just enroll in our batches. Okay, so now thank you everyone for joining me in this session. Do not forget to apply the code Y422, because with this you are going to get a big discount at mock test, ebooks, as well as the live as well as the bilingual as well as the English medium batches. Okay, so thank you everyone for joining me in this session.